Hello and welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra, and on this show, we'll get you an update of how the markets have been trading in the first half of the trading session, and also to help you understand how to really approach the market scenario. Currently is a very special guest joining in. Mr. Vinit Bolinjkar joins in from Ventura Securities. He's a market expert. Thank you very much, sir, for joining in, and welcome to the show. I want to begin by understanding from you, how are you looking at the markets currently? 3-4 days of gains, and that is fueling in some kind of confidence in the retail investors back again, that perhaps we may see a higher rally. But how are you reading the overall fundamentals?
So, there are two things. Let's discuss the pandemic issue. I believe that the oxygen issue is on the way to get sorted out. Number one. Number two is the fact that, then it remains to be seen how we deal with the situation, how it progresses. But all in all, I think the selective lockdowns we are going to see, the numbers come down. And, on economic activity, we have not seen much negatives in the form of shutdown of facilities. So I think that the worst kind of scenario has been factored in. The sentiment was high, but the situation is not that morose, and I believe that the rally will soon catch up as things get better.
Okay. Yeah. So absolutely, I wanted to understand from you, now that you say that the worst is perhaps priced in and we may just see better days right ahead from here on. So which are the pockets that are going to lead the rally? I mean, is it going to be the economy facing stocks and sectors like banks? Are they going to be the ones that should be on top of the radar of investors right now? Is it still going to be the theme of, say, pharma, IT, which has been running along so far? Or do you also bet on metals, which have been outperforming the markets?
So I think metals will do very well.
Okay.
There is metals, pharmaceuticals will still continue to do well. And, another pocket that we like is the agri stocks. Okay. So if you look at we are going to have normal monsoons. There's a lot of traction in terms of food grain production, exports. And, food stocks are really going to do well because of the inflationary effect. Mm-hmm. And I believe that, we will see a lot of stocks in these areas. So we like Deepak Fertilizers. Okay. If you look at Deepak Fertilizers, that company is not only into the chemical space, but they're also into your NPK fertilizers. And they're working at 100% capacity on TAN, which is an explosive material used in mining, as well as on the chemicals. The only drag was its NPK fertilizer business, where they were making negative margins as of last year. But because of the new product Smart Tech, their margins have improved from minus 1.8 to over 8% this year. And over the next couple of years, what we are going to see is that capacity utilization level going from 50 to 100% will drive this business. Not so the operating leverage will kick in. And after 24, they're going in for a massive expansion of about 3,000 crores for their ammonia and TAN facilities. So this stock does not factor in the rating that chemical stocks get. Second is it's a single digit PE stock. Okay, its ROEs are in single digits, ROCs also, which are expected to go to double digits. So I see granular growth in the earnings coupled by a PE re-rating. So we believe that the stock conservatively could be about 350 rupees in the next 12 to 18 months.
So should investors invest in this stock now? Would you recommend them, and what kind of targets are you seeing here?
So, at 260, I'm seeing another $100 move on this, which is a very, very strong kind of an up move. And we really like this story.
Okay.
And, it's got significant margin of safety.
Right. And the targets that you're looking at?
It's about
the long term?
I think if investors were to hold on for about for another 3 to 4 years, I think this stock could go anywhere around 600 rupees.
Oh, okay. So that's like a sharp jump that you can really see if you hold on for a long period of time. For all the investors who are looking to stay into the stock for say 2 to 4 years or 6 years, even this can definitely give multi-bagging returns right now here. Also, you did talk about the pharma space, and I wanted to understand from a micro perspective that there are three different segments that we're talking about. There is the pharma companies, the API majors, there are the vaccine place, also the hospitals and labs. Which is the pocket that you see having long-term traction? Where should investors be, and what should be the strategy now?
So I think we are going to see a secular run in pharma across segments. So
Okay,
if you're looking at injectables, we like Cadila, we like Kaplan Point. Okay, so these are some of our preferred picks. Uh,
sure.
yeah.
Also in metals, you did say that the metals will continue to perform. We have already seen a very sharp run. They have been outperforming the markets even on days when there is a broad-based sell-off, but the markets outshine the markets. Some of the names that have already seen a good run-up, whether it is due to fundamentals or the rally that we have seen, like Tata Steel, JSW Steel, Hindalco, all of them have performed. But where do you see the momentum continuing? Any particular pick that you would have for investors where you would say that the momentum would continue for long now?
So I think sale is one of our favorite picks. I
Okay,
think there's substantial steam left in that stock.
sure.
Okay, if you look into the medium term, I think Tata Steel also, which is going to move from about 25 million tons to 40 million tons capacity expansion, all brownfield, none of it is greenfield. You
Mm-hmm.
know, that also has significant space to grow. We like NMDC, we like Sarda Energy, okay, which is a
Right.
play on the iron ore story. And one stock which is not in the radar of investors and not many people know is that Jindal Saw Pipes has
Yeah.
got a pelletization plant. So they've got backward integration in the pipes business. So I
Mm-hmm.
think value unlocking will start happening there because the company is going to pare down debt significantly over the next 4 years.
Oh, absolutely. So some of
Yeah.
the names have been actually given out which are not on the radar. So you can start sifting all those names also for all the viewers, I'm saying. So also, which are the other two recommendations that you would want to give to all our viewers today, apart from Deepak Fertilizers, where you see a strong momentum continuing?
So I have a very interesting story, which is a new listing called Stovecraft.
Yeah.
It is so I'll give you the background behind it. If you take all peers, they are quoting at about 30 times FY23 earnings.
Mm-hmm.
This stock today at 507 is quoting at about 13 times. So there is, if you're buying this stock vis-a-vis the entire segment, so you talk about Crompton Greaves, Prestige, Hawkins, you talk of Bajaj Electricals, you talk of V-Guard, all these stocks are quoting at 30 plus times FY23. So
Mm-hmm.
why this stock? And this stock is a new listing. Okay, he's got uh, a brand which is known by the name of Pigeon. It's a
Yeah.
125-year-old brand. Plus, they also have a lot of backward integration in terms of manufacturing. They have two plants at Baddi and they have one at Bangalore, a very, very large facility. And they go by the mantra of, what Walmart follows, everyday low price.
Okay.
So they look at manufacturing in a way where they can cut price on a daily basis, right? So there is a significant focus on cost consciousness. Second thing is, they have been a e-commerce first company. So, 44% of their sales are coming from e-commerce
Mm-hmm.
vis-a-vis all the other players, who are below 30%. So what happens is that, during lockdowns, they make a lot of money. And because they have backward integration in terms of manufacturing, they're able to get to the market new portfolios, combinations, and stuff very, very quickly. So there, if you go on Amazon, I think out of five, three would be products for their Pigeon range. They make
Yeah.
products in the kitchen appliances, kitchenettes. They make glass top stoves. They've also got into manufacture of LEDs. Okay, and they're 20% sourcing from China currently, which they want to bring it down to zero. So, there
Right.
are a lot of significant levers that are there. Their margins are best in class. And because they are a value for money brand, so they are the price makers out here. They're also exporting. They're very strongly present in South. They're looking to develop their retail presence in the North. So I think they've got all levers fired out. They have figured out their strategy very well. And I believe that this company has got enough momentum, to play catch up in the kitchen appliances space with Prestige and Hawkins. So
Okay, so
there's
Stockcraft
significant,
is actually very interesting, very interesting
yeah,
points you've actually laid out
yeah,
with the
yeah,
kind of focus of the company, the
yes.
strategies, whether it is the digital sphere, whether it is the offline sphere, they are actually working towards it. Pairing the debt is something that you did point out as well. So all of those things are definitely going to help out the company going forward from here. Stockcraft, what is the kind of target you're expecting, sir, here?
So I think the stock could nearly double from these levels in the next couple of years. And my aggression on this stock is that at 13 times vis-a-vis industry at 30 times
Yeah.
makes for a lot of margin of safety. And as people, so it's a new listing, people are skeptical about what they will do. But once a couple of quarters are through, I think
Hmm.
the re-rating of the stock will start.
Absolutely. So something that all the investors looking into the kitchen appliances sphere can definitely look at tapping from here on. And the last recommendation, what would that be, sir?
So it's a slightly gray area stock where there are a lot of corporate governance issues. So it is
Okay.
Himachal Futuristics. Uh, but why we like this stock is that they are uh, if you look at the telecom equipment space, there are not too many plays available.
Mm-hmm.
Okay, so there would be Tejas, there would be Himachal, and there would be Sterlite Industries. And if you were to go and look into the business of Himachal, you will realize that he's got a optic fiber capacity which is equivalent, if not larger than what Sterlite is doing. They have presence in defense, they have presence across railways, and they bought backed orders from Qualcomm. So it ratifies their business, and they're getting into a lot of new product development. In fact, yesterday they announced two small orders, one for the EV space. So in the
Mm.
EV, they're looking at making harnesses for vehicles as well as for certain parts for the charging infrastructure. So
Okay.
there's going to be a lot of consumable plus OEM kind of plays happening, and they've also got an order in defense. Secondly, what a lot of people don't know is that they are making wireless radios. Okay, so and that is a very very big market for defense.
Right.
So it could be as big as 30 to 40,000 crores, and they're currently the only panel players.
Okay.
Apart from this, they are doing a lot of work in the railways, and they are also, uh, got an order book, cumulative order book of about 14,000 crores. Now, why is the stock not performing? So, there is an overhang of liquidity, number one. Second is, the promoter's pledge is very, very high. But
Yeah.
we believe that, the promoter's pledge could be drawn down this quarter, and the results are going to be declared on Monday. So we are very keenly
Yeah.
watching to see whether those pledges come off significantly. Do they come down to zero? So if they do come down to zero, I think that will be one of the single biggest factor for a re-rating of the stock. And then
Okay.
what? Then the focus of the entire community of investors will come back to Himachal, because it is such a big play. And
Hmm.
with 5G being rolled out, government giving go ahead, Chinese companies kept at bay, and they have a very close working relationship with Geo. So they have
Hmm.
a lot of captive business also coming in. There are rollouts happening globally, and they are also getting into the EV space, which is a new dimension opening up.
Sure.
And I think that it's a stock with very little downside risk,
Mm-hmm.
good order book, good visibility for short term, and significant growth drivers in new tech and high tech areas over the next few years. So I think that's a value for money stock, and it could. So without putting a price target on that, although
Sure.
we have said it's about $60, right?
Yeah.
I think that there is substantial legs for a massive re-rating of this story, because in the erstwhile decade, it was
Mm-hmm.
one it was a darling of the stock market in terms of telecom play.
Okay, understood that. Thank you for very comprehensively putting out all these stocks and the reasons why you have selected them. We'll definitely keep a watch over the management commentary as and when the results come out on Monday, so that we can definitely have all the investors and viewers keeping an eye out on this one as well. So thank you very much, Mr. Bolinjkar, for joining us and sharing your market outlook as well as these stock recommendations with all our Money9 viewers as well. And hope you stay safe in this current pandemic times as well. Moving on, let's quickly see how the markets are trading at this point in time. Of course, they were holding up onto the gains, slightly off the high point of the day, but 0.4% still remaining. Sensex above the 49,000 mark at 49,134, added about 190 odd points right now. 14,786 for the Nifty 50, it's slightly off the 14,800 mark as well, but there's a 60 odd point of addition for this one as well. The Nifty Bank is just slightly above the flat line. It's trading with the greens of almost 1.1%, 1/10 of a percent higher at this point in time. Also, the mid caps are absolutely flat right now, just managing to hold up above the flat line. As well as when you talk about the small cap index, there's just about 0.3% of gains coming in right now. So the gains are pretty mild, but they're still holding on, not giving up on the crucial levels as of now. Sectorally, let's see how the picture looks like. Well, if you see, there's a clear division between now autos, PSU banks, and also IT stocks now slipping into the red. The rest of the pack looks in the green right now, with royalty index now jumping up higher at over 1% gains. The media stocks are also inching up higher with 2% gains right now, and the metals outperforming, outshining the markets with over 3% gains at the moment. So clear, performers of the day, the metal index. Looking at the gainers and the losers pack as well. Now, the Nifty 50 gainers includes names from the metal space without any surprise. Tata Steel up 6%. Talk about Hindalco, that's up over 2% in trade right now. SPLI, Adani Ports, and NTPC, the other counters that are holding up over 2% gains as of now. The laggards would clearly have some names from the auto space coming in, as was there in the morning trade. So Hero Moto and Bajaj Auto, the two-wheeler companies, are down almost 2% in trade right now. Eicher Motors also slipping now, 1.5% downtick for this one. From the IT space, it's Infosys, the big major, down about 0.7%, and Tata Consumer continues its declining trend with 4% downtick as of now as well. Well, with that, we'll wrap up this edition of Market Meter for you. A lot of action on the markets and personal finance front are waiting for you, so stay logged on to Money9.com.